Very good morning from London. After a rather slow, damp opening start in Europe, we have seen activity pick up across the board. Firstly, in overnight data, the Chinese imports and exports just did dampen sentiment, coming in particularly lower than the previous for the Chinese exports. The imports lower than the expected quite considerably also. But moving through the European session, there has been a various range of factors which has helped the boosting of risk appetite across the board. At the moment, as I speak, European equity futures are trading at session highs, with the euro currency and cable in respective moves to the upside also. So just be aware that we had the UK industrial production and manufacturing production data considerably beating estimates to the upside for the month-on-month figures, generally hinting then that the economy in the UK may possibly not be as bad as expected, given that there was a large move in exports for the UK in the latest reading for the trade balance. Separately, there's been lots of focus on the German Constitutional Court, which are ruling or hearing arguments against the ESM and the fiscal pact against national law in Germany today. The actual court itself has said they will not give an opinion on the ESM ratification today, but there has been market rumours and swirling market talk that the court itself will ratify the ESM, and that gives the green light for the full EFSM ratification domestically in Germany. But that's only a rumour at the moment. Separately to that, following the poor Chinese data overnight, there has been market talk that China will cut their RRR for banks as early as tonight or in the session tomorrow. So this follows the interest rate cuts we saw from China last week, and it could be some further easing from China in response to some further weak data. As a reminder, we do have the Chinese industrial production and real GDP later on during the week, so it could be a preemptive move if indeed the RRR has been cut. Otherwise, keep an eye on peripheral Europe. The Italian 10-year bond yield has moved considerably below the 6% mark to the downside. The Spanish 10-year yield also seeing relief, trading below 6.9%. We've seen considerable tightening in the Italian and Spanish 10-year government bond yield spread over bunds, and that has been driven by some commentary overnight from the Eurogroup. They have noted specifically that the EFSF is able and willing to bond buy in the secondary market. This is within the treaty and is to be expected, but nevertheless being spelt out again, just spurring some confidence in peripheral Europe. Alongside that, some clarity on the Spanish situation from the Eurogroup overnight. Comments expected then from the ECOFIN meeting today, which is the finance ministers meeting following the Eurogroup. Otherwise, keep an eye on any further market talk. We've already moved higher across the asset classes, so we could see some increased volatility with a generally quiet data slate for the US. No real tier 1 data apart from IBD tips and the jobs job openings. But that's enough from me. Hope you have a good trading day.